Welcome to the HMO Property Show. By investors, for investors. Catch us weekly as we discuss all things cash flow positive property investing. Whether you're a seasoned investor, a new landlord, or just curious about property investing, this is the podcast for you. Sponsored by the Co-Living Collective, your trusted partner in creating vibrant and sustainable shared living experiences. Visit us at colivingcollective.com.au to learn more.
Welcome back to the HMO Property Show. I'm your host, as always, Neil Gibb, and today, following on with our boots on the ground area experts analysis to get some feedback about what's actually going on in the market, we've got Michael Keil from michaelkeil.com in conjunction with the agency. Michael.
Thank you, Neil, for having me.
To the podcast.
No, I appreciate it, mate.
Thanks for coming down this wet and windy day.
Absolutely.
It's a nice place to be, actually, when it's like that outside, isn't it?
It's very good in here. It's nice and cosy.
We've had a good conversation before we hit record there, mate. It was really good to find out more about you and where you've been and what you've been doing. Very experienced by the sounds of things, and excited to dig in and find out a little bit more about the Belmont Shire today and what's been going on, what's happening now, and what we expect to happen in the future as well.
Brilliant. Okay.
But before we do that, who's Michael Keil, for the people that don't know?
Yeah, okay. So Michael Keil is, I'm approaching 53 shortly. I started real estate at the age of 18.
Right.
And pretty much, I've been in real estate all my life, from my working career, 35 years now.
Wow, excellent.
And still going strong, mate. So, and in that time, I've run small businesses. I set up my first business by the age of 21. And that's still operating today, which I'm very proud of. It's quite a strong brand. It's called Porter Matthews, so you would have probably heard of them.
You set that up?
Absolutely.
Wow,
I was
fantastic.
one of the founding partners in the residential division of that business, because it was a commercial business originally. Then, had Real Estate Champions, where we were the top selling real estate office in Western Australia. So that was a bit of a feather in my hat. And now I just run michaelkeil.com in conjunction with the agency. So I'm a family man, absolutely love real estate. Still got a probably good 10 or 15 years in me, I reckon.
You love what you do. You never work a day in your life.
100%, yeah. So, and it's a real honour to represent people and help them, through sometimes difficult situations. And the good thing about, when we'll discuss Belmont shortly, is most of my clients love me because over the years it's been a great performing suburb. It's always been fairly consistent, good rents and good capital growth. So
good location in proximity to the CBD, the airport.
Absolutely, it's underrated.
Yeah. Take us back to the start though. You got into real estate at 18.
Yes.
What got you into real estate? What was the first role?
Okay, so how I got into real estate. So we come from a family where we owned hotels. So we were sort of in real estate with the hotels, owning the land. My father was the licensee for my grandfather, who so it was a family business. So we owned a couple of hotels, and one was in Vic Park.
Right. Still there now?
Still there, yeah. It used to be Irene's Park Tavern, but now it's called Franklin's. So it's run down now, but it'll be, it's a beautiful redevelopment site. So it's, like a site bigger than where the Boston Brewery is.
Yes,
so that's probably what will go on there in the future. And I was going to head into the pub industry, and Dad said, mate, don't do it, because he, said it was a mug's game. You're dealing with people with a lot of alcohol issues, drug-related issues. The hours were intensive. Hospitality, I think, is just
unsociable hours, aren't they?
Yeah, tough business.
Yeah.
And he had some patrons that were doing quite well in real estate. And he goes, Mike, these guys, they always seem to have money, and they always seem to, have time. So he said, and they never work indoors, they're always outdoors. And he goes, you wouldn't like working indoors, so real estate should be perfect for you. And interestingly, I was trading shares from about the age of 14 or 15, so I loved buying and selling.
I always had that entrepreneurial flair by the sounds of it.
Well, that was from my grandfather, so
right.
he was a big investor.
Right.
And so Dad just said, mate, you love buying and selling. You won't be stuck indoors. You can make some good money, and if these other guys can do it, well, surely you can do it. And so that was it. And I went off marching to my first job interview, only to be told come back in 5 years' time.
Too young.
So and then the guy, I can't remember his name, but he used to have Roy Weston's in South Perth. Probably 3 years later, he was going, God, that was the worst decision I made, because after 3 years in the game, I was sort of really making some inroads. So age is no barrier. If you're hungry enough, you can succeed at any age, I believe. Yeah.
And what was it like setting up your own business? Were you in partnership with somebody at 21-year-old?
I started my own business on my own. So that was interesting. It was called Estates Realty. And I didn't even have my own real estate licence, but this was to show you how, I guess, entrepreneurial I was at the time. I bought one. So there was a gentleman, Mel Harvey. Yep. He was an accountant, and said, look, I want to run my own business, but I need a licence. And he said, yeah, well, I'm happy to do it. And there was a dollar amount, call it $500 a deal. Every deal I did, well, he'd get that for his licence, and he'd be in control of the trust account.
Right. Okay.
So that was, and that was a little business I set up in Epsom Avenue in Redcliffe. And then from that it morphed into Porter Matthews. So we merged that into Porter Matthews and brought in another good agent in the area. So he became a 25% equity holder. I had 25%, and then Bruce Porter and Terry Matthews, who were commercial agents for Porter Matthews, they took the other 50%.
Yeah, right.
So so I did. I was always pretty keen to get out there and have a crack.
Yeah, nice. And you also had, was it Champions?
Yeah, so the Champions journey. So that was 2002 to 2009. Mm-hmm. That was an unbelievable business. Mm-hmm. The experiences that I learnt from that were just, next level. We sort of morphed from salespeople into business owners. So. We grew to a staff of 80, so it was quite a big business, and the number one REWA office at the time, Steve Harbour from Harbour Real Estate had a monopoly on the awards, and I think it might have been 2007 we knocked him off, which was a real feather in our hat, and probably, I don't know, somewhere like 550 sales for the year for the company.
Wow.
So, so it was quite good, and that was a Champions journey. We set up a whole lot of other businesses as well connected to it, so tried to create that one-stop shop.
Yep.
And that worked very successfully, doing people's settlements, doing their finance. Then we even got into building homes for people. So, so it was quite interesting.
Sounds like a similar model to where we're at the minute.
Yeah. Well, again, if you can get it right and you have the right values and you bring in the right people, there's no reason why you can't do that and have a very successful business.
Yeah. You said during that journey as well that you spent a lot of time on personal branding.
Yeah. Actually, I'll tell you a funny story on personal branding. So myself and Mark, we've got it. That's my ex-business partner. We had a little running man as our logo, so it was quite different for a real estate business. And when we got it all trademarked, then we actually went and got it tattooed on our shoulders. So
still got it?
Yeah, still got it. So the little man has got his sort of hair blowing back. If when you look at it, and it was our symbol for striving for excellence. So still wear it very proudly today as that person who strives for excellence.
Beautiful.
Yeah. So, branding was massive. We were doing full pages in the West Australian. We had our own in-house marketing person. We produced our own newsletter called The Foundation Magazine that would be distributed to thousands of people monthly. We really were leading edge. My ex-business partner had a marketing degree, so we, when I look back, we really were innovators in the real estate space, and even doing training not only for our group but for the industry as well. We took on that role. It was an amazing journey. Glad I did it, but also glad that I'm not there now, because life's a lot simpler.
Yeah, so what year did the Champions journey
So that finished in 2009.
2009, and that's when you moved into michaelkeil.com.
No, after the Champions journey, I went back to Porter Matthews, my old business, and resumed there just as a salesperson.
What was that like going back?
Mate, it was fine. Yeah, it was beautiful.
Did it feel weird?
No, not at all. So, because the principal there, Ray Grogan, he had a fantastic remuneration system for me, and I just wanted to go back and test myself just as a salesperson. And it was interesting. We built up quite nicely to, I think, we got to 2014. And that year, myself and my little EBU, my team, we sold 185 properties. So every day I was either listing something or selling something, and wrote about $2.5 million in commission, and that put us in the top echelon of agents, not only in WA but in the whole of Australia at the time.
Right.
So and then I went to working 3 days a week and still selling close to 100 properties, and just letting the team do more hands-on stuff.
It's got to be the dream, that, hasn't it? 3 days a week.
It was pretty good, and at that time, that's 2015, so that's 10 years ago. I had children. My eldest child now is 16, so there was one at 6 and one at 4 and one at 2. Yeah. So I sort of made that sort of commitment to try and be around my children as much as possible, and that's interestingly enough, probably from that period, I've just been on this journey to live the most balanced life I can possibly live. So I really make sure that I'm at all my kids' events. When I work extremely hard, but I don't miss their sports. I'm active in their coaching and training and the runner, all that type of stuff. So and I try and take as many holidays as I can during the school holidays, because they grow up so quick, So balance has been a main one for me, and part of if we go back to the Champions journey, it was a great journey, but I was at that point in my time, life very unbalanced, and unbalanced in the way of not being happy within. So achieving a lot, but not being happy or fulfilled by myself. So I had to make some drastic changes to sort of get back to being, truly happy within, and and that was finding that balance. Yeah. So which was really, critical. Yeah.
It's why we set businesses up. It's why we build portfolios of properties that are cash flow generating.
Yes.
So that we can step back and enjoy the fruits of your labour.
Absolutely. 100%.
And life now?
Yeah, life is amazing. Yeah. So I run michaelkeil.com, and I work in conjunction with a very large brand in Perth called The Agency. The Agency is a national brand. So they're all over Australia. I think there's about 600 agents, and in WA there's probably about 160 agents in the network.
Big brand, yeah.
Still in that network in the top 5 salespeople. So I'm pretty happy about that. because normally after you've been in the game for 35 years, you start slowing down. But I like the fact that I can still, be up there with the best and still have the energy. And that business now is very small in the way of it's just my admin PA, myself and my wife. My wife does all the financial controls of the business. I'm the guy that goes in and does the appointments and gets the listings and closes the deals. And then my admin PA, she facilitates all the back end, so provides all the after sales service.
That's amazing.
So she's amazing.
Yep.
And so far, first 5 months, and now it's nearly 6 months now. End of June, we've already hit 50 sales for the first 6 months of the year. I'm on holiday shortly. We've got 4 Ripper listings. They will be closed in the next 2 weeks. So we're that'll take me at about 9 sales a month. So this year we're tracking for 100. But the next 6 months is going to be interesting, which when we get into the real estate market, there's some real interesting things that we're seeing firsthand. So I think the market's about to kick and kick quite aggressively with what I'm seeing in the street. So. So that's pretty much my journey. I just, my number one thing for a very long time when I was in real estate was all consuming for me. That was my identity. It's certainly not my identity anymore. Real estate is just a little component of what I do. Now it's, I just really want to be known as the best husband and family man. And my kids absolutely love me because I've spent so much time and effort being there for everything that they do, and that's more fulfilling than selling houses. But I still happen to love selling houses.
I think there's almost a podcast just in what we've been talking about there, right?
Yeah.
Work-life balance, building a business so that you can step back and let the business work for you.
Yeah.
Before we get into the property stuff, I work with my wife as well, built the business from the ground up with her. What's it like working with your wife?
Brilliant. So Joe, so my wife's Joe. I think your wife's is Joe as well. So, Joe, sort of when we got married, she only, knew me as a real estate person. So, and she's got 2 degrees, one in teaching and one in PR. So she's quite a talented lady. So, and I quickly snaffled her and said, "Yep, you're
put a ring on it."
You're working in real estate now." She's amazing, just very good with financial management of the business and the household. And she's just an amazing support. So she allows me to do what I've got to do. Saturday mornings I do get out the door early, and Saturday's really game day for me. So she's just very supportive. If I've got to do some late appointments, she's understanding that it's for the greater cause for the family.
Yep.
So we barely have arguments. So that's I can't even think of the last one we had, but so we're very on the same page, and we love taking time out together. We've got holidays coming up. We have a Friday off together. Beautiful. While the kids are at school. So I know you've got a young family, but when they're all at school, you've got to make sure you have that day together, and make it into a bit of a date and go get a foot massage or have a nice meal somewhere. So so for me, a lot of I know a lot of people say it'd be terrible working with your partner.
I really do.
Yeah. So and one of the things we do really well, I don't know if you're the same, but we only meet once a week on a Thursday. We have our business development meeting. So it's 8:45 to 10:30. And that's where we produce our weekly newsletter that we send out. We go through, anything of, for the following week, what we've got to deal with, where the finance is at, some projects. She might have to do some marketing, those sort of things. So she does a little bit of that as well. And then we try not to bring real estate into, the other day. So and it's quite funny, because, if we don't talk on the Thursday, then basically it's got to wait for the following week. So, so that works well.
It gives the divide from work and home.
Absolutely.
Yeah.
So doesn't mean that I don't work at home, because sometimes, most of our properties we actually sell in the evenings, now, sort of 7:30, 8 o'clock. We do all the DocuSign paperwork, so we're definitely working, but, we try not to talk about work, but if there's a contract to do, well, so be it.
Yeah, beautiful, mate. Well, let's get into Belmont, the Shire itself. How many suburbs have we got inside Belmont?
So there's 5. So you've got, I'll start with the most expensive and we'll work our way down.
Yeah.
So you've got Ascot, medium house price in Ascot's pushing around the 900,000 mark. Obviously Riverside suburb, quite a diverse area because you've got sort of 3 sections of Ascot. You've got the Ascot Waters, that's where most of the expensive homes are. You've got the Ascot horse property area, so that's it's quite expensive in there, but they're big properties with stables. And then you've got Trebraddon on the Swan, which is sort of down towards moving towards Guildford Way. So the prices sort of fall away there. But there is also Fauntleroy Avenue, which is got some beautiful riverside and expensive properties there. So Ascot, highest medium house price. Followed by Rivervale.
Before we get into Rivervale, who's there? Do we have a typical demographic in Ascot?
Well, it's so different because you've got, Ascot Waters, so probably a lot of those blocks are smaller blocks, but they can be quite nice big homes. So, you can have the families in there, but, they're a bit restrictive if you want a bit of yard area. A lot of executive type people in there. Obviously, the horse property caters a lot of the horse industry. What's happening in there now is because of cost of transporting or labour, a lot of the horse properties that aren't right near the racetrack, they're actually becoming obsolete because if you've got horses, you've got to sort of hire a truck, put them in the truck to cart them, 1 kilometre down to the track. So a lot of those horse properties, when they come up for sale now, they're getting chopped up, subdivided, still big blocks because like our 12.5 there, and just building nice homes. So that's and interestingly enough, for your model that you're working on, that would probably be an area that I would definitely target some of the investors in because it's close to the city, it's close to the airport, so you've got the fly in, fly out people, city workers. And the square metre rate is it's the cheapest square metre rate of land close to the city because it is R12.5.
And then there'd be a good uplift when you build on there then for the finished product.
I think so, and because you're building on an R12.5, you're probably also going to be able to provide some better parking solutions with having a bit of a bigger parcel of land potentially. So, but anyway, that's and then the demographics of Trebraddon on the Swan. That is a little bit cheaper in there, so you might get young couples, again city workers, investors, that type of thing in there. But Ascot predominantly is owner occupied area.
Okay, excellent. And it's kind of hidden on the other side of the freeway that goes through there.
It is, Great Eastern.
Great Eastern, that's the one. Yeah, it's kind of on the other side. Sometimes if you forget about, you can drive through there and not even know it's there.
I don't even think a lot of people know Ascot other than the horse races once a year, Perth Cup is on the map.
True. What's suburb number 2?
So suburb number 2 is Rivervale. So Rivervale is really, really performing well. That's currently sitting around the 850 mark. And I think there's huge upside in Rivervale because the neighbouring suburb right next to it is Lathlane, and Lathlane now medium house price is sitting about 1.15.
It's expensive, Lathlane,
yeah,
isn't it?
Yeah. The medium house price for Lathlane's even more than Vic Park, East Vic Park or Burswood.
Wow.
So a lot of buyers, they can't afford Lathlane, but they want to be as close as they can to there. They jump into Carlisle and Rivervale, and so Rivervale is one of those areas where it's seeing some very good growth, but it's still remarkably cheap, especially eastern staters. They come here and go, how can this suburb that's 5.5 k's from the city be priced, with a medium house price of $850?
Why is that?
Look, the area has had a bit of stigma in the past because there still is public housing in there. But over probably the last 10 years, the state government have sold off a lot of the public housing homes, and the young people come in, bought them, renovated, and it's improved the area out of sight.
Yeah.
So I sort of liken Rivervale to, when I was starting my real estate career, we used to go over to the Australian Real Estate Convention, and there was a suburb over there near the rocks. It was called Redfern. And it was so cheap, but now it's so expensive because people just want to be close to the city. Yeah. So as Perth grows and the population gets bigger and traffic becomes a real issue, people will be paying a premium to be close to the city with great road infrastructure. And what I reckon still hasn't really kicked in yet, and is still to come, is all of these areas. The eastern side of the city has been the poor cousin to the western side, but now we've got the new stadium there. It is basically the entertainment hub, and you only just got to have a look at what's happening in Vic Park and the Burswood around there with the Crown and all the restaurants. Yep. And you can see that these areas are changing really quickly.
From the DFO, the airport.
Absolutely. Yep. So I think, I wouldn't be surprised if we see the medium house price of Rivervale at $1 million in the next 18 months.
Yeah,
and that's a big call.
Yep.
But so what do we, call it? Even if we said 2 years, I reckon that's where Rivervale's heading. I've just sold a property in there on a 500 square metre block, 4x3 home. Very nice home, single level, and it's just sold for 1.36. The prices are starting to push up in those areas.
What are we seeing for the median house price there? What's a typical house that you're selling at that price?
So that was a 4x3.
Yep.
Probably about 250 square metres internal living.
Yep.
Yeah.
And for the median of 850, what are we selling there for that price?
850, that'll be probably like a little old fibro home,
yep.
Maybe on a 600 square metre block.
Yep.
Or might be one of these, a rear home, 3x2, around 850. Maybe even those are starting to push up, to 900, 950.
Yeah.
So,
and the old fibro houses on the 600 square metre block, are they subdivisible?
No, they're just majority of them are just zoned R20.
Cool.
So so there are some little pockets that are R20, 40.
Yeah.
That'd be more like a single block.
So they might get flattened and someone build a nice family home.
That's
there
exactly what's happening. Yeah. If you're buying one of those, that's the plan. You're going to renovate and extend. Maybe some people have had a place. Also, we sold for 1.35 in where was it? St Kilda Road, and they stripped all the asbestos, kept the frame of the house, recladded it, extended on, dropped in a pool, and that went for 1.35.
Wow. What did they pay for it?
I'm not sure. Yeah,
it's a good price, though.
Yeah,
good price. Yeah, I'm thinking work-wise, what that would take, not hundreds of thousands, but it'd be up there, wouldn't it?
I think now with building and trades, it's getting. You'd probably be going because the building costs are going up so much. You'd probably be going, do I do this or do I just knock it down?
Start again.
Yeah, and interesting. I spoke to a client last week in Lathlane, and they were going to extend on, and the costs are just blowing way out.
It's expensive.
So they're just going to knock so it's a really good home, brick home. They're going to knock it down and start from the beginning.
Yeah.
So. I think doing extensions, is sometimes nearly as costly as building a new home.
Yeah, and time consuming as well.
Correct.
Yeah. Anything else in Rivervale that we didn't touch?
No, just the demographic there is it's transitioning from your sort of blue-collar worker area to very much white-collar, very professional.
So gentrifying.
Yeah, big time.
Yeah, okay.
Big time. Yeah.
Interesting. That's good. We've got a few projects in Rivervale now.
Awesome.
Yeah.
Awesome.
What's number 3 in the area?
Okay, so number 3 from a price point of view is Kewdale. Yep. So Kewdale's piggybacking off what's going on in Lathlane and Carlisle. So a lot of buyers. So an example, I've just sold quite a good size 4x2. Went for, it's a rear home, and it was over 200 square metres of living, that's internal living, not including garage. Mm-hmm. That sold for $861. Now, the buyer that bought it was looking in Carlisle, which is just across Orrong Road, and you're paying $900 to $950 for a 3x2 villa in a group of 3. So he was just like, I'm not going to spend that. I'm going to come here, and I'm getting far better value or bang for your buck.
Yep.
So, and Kewdale is one of those areas. It's a hidden secret.
Yes.
That one is so people think Kewdale industrial area, but
I was going to say this,
in there is a beautiful residential suburb. In Kewdale, there's hardly any public housing. It's the best area to buy in the Belmont district because the public housing, I think, is less than 1%. Where a lot of the other areas like Belmont, Rivervale, public housing can be up to 7 to 10% of the suburb. So that's that makes Kewdale very attractive for families.
Yep.
It is very much a family area. Not a lot of development in there, mostly R20. Got beautiful Tomato Lake. And the medium house price there is sitting around $800,000, so or just under 800. So again, great little hidden secret. I've got one in there for sale at the moment. It's on a triplex block, so just over 800 square metres. It is zoned R2040, so you knock the house down, you can do 3 townhouses on there, and we just put that on the market. We've got multiple offers, and it's sort of it's hovering around that 865 mark.
Wow, for a triplex.
Yeah, for a triplex block. So so to me, like that's a bargain.
Yeah.
Close to the city with a rentable home that you'll get $600-650 a week. Mm-hmm. So for any of your investors that are listening to this, something like that, and then they do your 6x6 homes on there. So close to the city. So there's a real, I imagine, great demographic for city workers and fly in, fly out workers.
We've got one on Acton Ave in Kewdale as well. Rent really well. I think we picked that up for like lower 5s 3 or 4 years ago.
Yep.
Rent really, really well.
Yeah, beautiful. Beautiful.
Yeah. Do we have a typical sort of housing typography in Kewdale?
Mostly brick and mostly 70s styles, and a lot of owner-occupiers. You also have the old Kewdale primary school, high school, was converted to the Islamic college. Mm-hmm. So you do have a lot of people that want their kids go to that school. It's a fantastic school, rates very highly in the ATAR. Mm-hmm. So you're getting a lot of Middle Eastern families now wanting to locate to that school. They specifically come from anywhere in WA to be in that zone.
Things we do for our kids, eh?
That's it. Yeah. So and like there's plenty of other suburbs where there's public school zones that have benefited very well from the schooling, around Perth. So so Kewdale's got that as well. So it's sort of quite multicultural suburb as well. I've done a few little developments, and every time I've been looking to do a development, and I've just Kewdale's where I've happened to find the best value, and it's just such a great area.
Yeah.
So
like Kewdale, like you say, it's kind of hidden. It's done small, gets dwarfed by Welshpool and the industrial stuff that's going on there.
Absolutely, yeah.
Number 4 after Kewdale.
Yeah, so the next 4, 5 and 6, probably we can sort of put them all in one category. So you've got Belmont, Cloverdale and Redcliffe. So they're all very similarly priced around that $750 median price range.
Yep.
So obviously Belmont seems to be a bit more desirable than Cloverdale, because City of Opportunities, is the Belmont Shire. So it's sort of a more well-known area, more searched area. So and it is closer to the river. And a little bit further away from the aircraft noise as well.
That, people's perception of how noisy it's going to be.
Yeah, so Belmont would probably rank more highly over Cloverdale, Redcliffe, but they're all sort of similarly priced.
Yeah.
And again, demographic there, transitioning very much from blue collar to white collar.
Right.
So all these areas are sort of going through that. Cloverdale, that's another great area. The Belmont Shopping Centre is actually in Cloverdale, so a lot of people don't know that.
It's a good shopping centre, though.
It's a great shopping centre, so very good shopping centre. And again, the price point there is very, very good. There you're going to probably get a brick and tile home on a 700 square metre block, around that $750, so sort of under $1,000 a square metre.
Wow.
And we've recently sold a couple of duplex blocks in Cloverdale, just under $800,000. So and they were both on corners. So to me, they were pretty good buying.
Yeah.
But they both went very, very quickly as well. So lots of investors seem to buy in Cloverdale. It is an area that is predominantly for, call it 3 or 4 years ago, when the prices were, medium house prices were probably $500,000 for the area or less.
Oh, them were the days.
The area was very much a first home buyer area because the price point was very good. But we've actually seen the area become less of a first home buyer area because of the prices moving up.
Yep.
But there's a good spread of housing in sort of Belmont, Cloverdale, because there's quite a bit of R2040 being around the shopping centre. So now you can sort of buy a 2x2 apartment, maybe in a group of 8 or 10. Then we've sold a couple in there recently, sort of 500 to 550. So first home buyers can get into that area. For a 2x2 apartment, and there's quite a few of them around. About 10 years ago, they changed the zoning to allow these multi-dwelling properties. And to me, they're a great buy because I've done a few of those developments, and now with the current value of the land plus the current construction costs, no developer can build them and sell them even for $600,000 and make money.
Yeah.
So to me, there's a mismatch in the market there for those. But I think you'll see in the next 12 months that'll change pretty quickly.
The prices drive up.
Yeah, especially in that bottom end. Anything affordable is going to see the most growth, I think, at the moment.
Yeah, it's becoming less affordable, as you say there, isn't it? And that transition to the white-collar worker. Yeah. Moving in there.
And spending money, doing the places up.
Yeah.
And then probably we'll recap on the last suburb, which I think it's got massive potential, is Redcliffe. So, like you say, they're doing the DFO there. There's the Costco. So eventually, with the airport project and the domestic merging with the international, that domestic land is going to become like a business park. Yeah. So it's going to, and that's to tie in with the train line infrastructure there.
Redcliffe's got a train line now,
and around Redcliffe train line is what's called the DA6, the Development Area 6. So it's proposed for a lot of high-rise, affordable housing to go in there around the train station. So it's probably going to play out over the next 10 to 20 years. So it's not going to be, an immediate thing, but that's pretty exciting. So just having that $1 billion infrastructure project, I think, has made quite a bit of a difference. And it's interesting because when I looked at the latest numbers for Redcliffe's medium house price normally is around that 750, is sort of approaching 782 now. So it's sort of getting a bit re-rated because I think the infrastructure's there and people seeing that there's a huge opportunity and people want to live where they work. Yep. So, Rio Tinto's based out there with their, remote operations for their trains and things like that. So, yes.
We can also get direct from there to the city on the new train line that's been put in
correct,
there.
Correct, through to Bayswater, so it's all quick. I should have been on the train line, mate. I haven't even got on there. No. I actually went to the opening day and it was just like, it's too busy, so I abort.
Yeah.
So,
And you touched on it just there as well, the extending the amalgamating the domestic and the international terminal. I think is that like a $30 billion project or something?
I didn't think it was that much, but it's it's in the billions. Yeah. So so that's going to, all the workers need to come in and rent somewhere or live somewhere. So it's just, again, there's even the airport employs so many people. So there's and all the around there, you've got the Kewdale Freight, the Belmont Industrial area, the Welshpool area. And a lot of the corporates, like Toyota, have just put a massive service parts industry warehouse in Kewdale. Yep. A lot of, believe it or not, a lot of executives, they don't want to live over in the western suburbs and then commute to their warehouses. So they're looking for solutions close to work because, we all seem to be working longer and, less time with family.
The roads are getting busier.
Absolutely.
Yep.
Again, there's people looking for executive type homes in these areas as well.
Interesting, mate. Thank you very much for that overview.
No, you're welcome.
Very comprehensive. Let's go back to 2018. The market was starting to correct itself. There was some green shoots coming through. Then we obviously got COVID kicked in, and the market went crazy. What happened in the Belmont area from there?
Yeah, so it was a very tough market because 2014 was unbelievable. 2015 it was coming off, but still exceptional market. And then we went into the downturn of 16, 17, 18. Belmont didn't. Belmont probably copped a double whammy. Because with the areas pre-2014-15, there was a zoning change. So with the zoning change in the area, a lot of the properties that got changed, zoning got an uplift in value at a time when the market was, going bananas. So a lot of those people who bought then were heavily underwater when the downturn came. And then we saw an influx of, with the iron ore, slow down resources, people, tradies, because they were near the airport. They were basically going, right, I'm selling, I'm heading back to New South Wales or, overseas, New Zealanders, because the work had dried up. Yep. So basically, because we had a lot of those workers affected, then it sort of put extra strain on those suburbs. So probably it did take a bit of a hit then. Back to when we got to 2019, it was still quite sluggish through that. And in the last quarter of the year, we were like, oh, yeah, we're on here, because the sales volume picked up quite dramatically. And we could see the buyers moving in pretty quickly. And then COVID hit. And so that sort of just prolonged things till June 2020, where we were just coming out of that downturn.
Yep.
And then we get hit with COVID.
Yeah.
But that was, that effect on the market was only call it 2-3 months. It was pretty minor. Yeah. And then it just kept going from there. And, pretty much just had upward momentum. And I'd probably say last year from January through to August last year was the 2024 was the best I've ever seen it in real estate, even better than the boom of 2014 in these areas.
Big statement.
Yeah, absolutely.
Who was buying there?
Well, you just had so many people wanting to get into the market. So eastern states buyers, they were very active, have dropped off. So they're still there, but nowhere near last year's level.
Actual buyers or buyers agents as well?
Buyer agents were very active, so, and representing eastern states buyers. And they still are, but most of them I'm seeing more local buyers trying to, get into the market. So, and then obviously I reckon around September, October, there was a shift in the market last year where it was still great, like we were still selling stuff, but suddenly properties where we were, getting 60 or 70 people coming through had just sort of dropped down to 10, but they were, the 10 that coming through were still very genuine buyers. Yeah. But it's like, oh, well, where's everyone gone? But it was at that time where the RBA had sort of said, look, we're probably not going to move on rates till May 2025. So, and you're sort of heading into Christmas, and sometimes it's interesting in all my time in real estate. Sometimes, depending on the year that you've had, the momentum can go right up to a week before Christmas, or it can stop in November, like mid-November. And sort of that's what happened last year in 2024, where I think buyers were just fatigued. The market had gone up so much. RBA said rates are going to be on hold for longer. And then people just said, right, I'm going to pause. Still selling stuff, but the frenzy had sort of just disappeared.
The heat had come out of the market. And
it changed really quick.
This really happens overnight, doesn't it?
And it's quite funny because some of the from a pricing point of view, you as an agent, when you saw that change, you then had to not be so bullish on prices because if you were bullish on the prices, and it was fine because if the market's going up so much, if you're out by 5%, you're okay. But when it stops going up and people are just, looking and taking their time, then your 5%, suddenly you're sitting there. And late last year, I had to do a couple of price adjustments, and I hadn't done any price adjustments for nearly 3 or 4 years.
Did that get them moved?
Oh, absolutely.
Okay.
So, So, and then within your pricing, you need to then get yourself in alignment with, hey, we've got to be realistically priced because there is a bit of a change that's happened in the market. So, and interestingly enough, then heading into 2025. When we saw when I saw the change, I then said to people, look, it's pointless going to the market, now in December. Let's just launch it in the new year. Most of the agents will be on holidays, and normally New Year it kicks off. Historically, for me, it's always been quite successful. So I sort of start back the week after the New Year's Day. And I work for 2.5 weeks, and then I take a week off, later, around Australia Day. So I sort of launch all these properties when no one else is sort of working, and it's been very successful for me.
Give away your trade secret there.
It's okay. There's plenty of business out there for good people, that. That's what we did, and 2025 kicked off beautifully. Right. So it sort of got to call it the 17th or 16th when we braked and just pretty much sold all my listings that I'd launched. So I thought, we're back on.
Yep.
So that was the first signal, like it's on again.
Yep.
Not as frenzied as like it was last year, but as we've gone through now, what was it? May was really big for me. April was ordinary.
Yep.
But April always is historically because of school holidays, Easter, and Anzac Day, long weekends.
Yeah.
So April was ordinary. May was massive. March was massive for me. February was massive. January was massive. And February was ordinary because I'd basically had to restock from everything I'd sold
everything.
Yeah. And talking about stock, that's the issue now. So you've got interest rates, a couple of rate cuts.
Yeah. Federal elections out the way.
Yep.
Sentiments changing.
Big time.
Yeah.
So basically, in my business, I do a weekly newsletter, and it's my mate from school, Ryan Bridie. He's my in-house economist. He writes a fantastic letter, and we monitor the market really, really closely. And the 24-day moving average for Perth medium house price is definitely trending up quite nicely now. And for the last 8 to 9 weeks, there's been some really solid growth of 0.1 to even up to 0.3% creeping in. But if we sort of bar chart all of those, we see an uptrend. There's definitely a lot of analysts or experts that forecast 8% growth for this year. Up until March, we were probably tracking for 1% growth based on the minuscule growth that we're getting, and we had a couple of negative weeks as well of price growth. But now we certainly are looking like that's going to be very likely, especially with stock levels dropping as well. So as an example, so last month I sold 13 or 14 properties, and then this month I've sold 5 so far. I've got 4 listings on the market, so we'll end up with the 9. But 2 of those listings I've got multiple offers on. 2 are just hitting the market today. So basically I'll be sort of going into June, having a bit of a breather with school holidays, but basically being sold out, and then we'll line everything up for sort of mid to late July when I get back. So we'll have 4 or 5 properties to launch then. But I can see just with myself and also other people within the agency that the stock level is really, really dropping off. It's going to be very, very interesting. I think we're sort of we're heading probably back to 3,500 listings on the market. That's including land in the metro area.
Which is ridiculous.
And that is crazy. And that's going to lead into frenzy heading into spring. Further rate cuts, they're talking, I think it's 80% probability of a rate cut in July. I just think we might see, what we saw in the first half of 2024. We might see in the second half of 2025. That's how it feels to me. And we're definitely a lot of my properties. Just an example, we had one in Belmont. We priced it from $950 to $1 million. It was a well presented 3x2 renovated on a 911 triplex block, or keep the house built behind. And we were thinking it could get to $1 million, and we had so many offers on it, and it went for 1.1 million. So that sort of stuff's
indicator.
Sort of. And so that sale, and there's been heaps like that'll settle in 6 weeks, or and that's going to then start affecting the weekly price growth data.
Yep.
So definitely prices are trending back up, and the early indicators are it's going to affect these medium house prices and these areas that we're talking about pretty rapidly again.
Interestingly, you said there was some of the weeks or some of the months where we tracked into the negative, and this is when I started seeing everybody in these Facebook groups and in the news saying, Perth lost this crown.
Yes.
And I sat there scratching my head saying, well, nothing's really changed in terms of numbers. You said we've got 3,500 properties, including land for sale, and we're averaging around 900 to 1,000 transactions a week.
Yes, correct.
So literally just...
churning.
You can't get any lower.
What have we got? It's currently just above 4,000, but I think it will be at 3,500 because of the holidays coming up. Mm-hmm. So it's very rare that people are going to launch their property during the middle of school holidays. Mm-hmm. So they're going to wait, or a lot of people will even hold off till we're closer to spring, warmer weather. So we could even go down to 3,000 homes, and get to the level that it was last year, where we saw 20% growth happen, pretty much in 6 months. It definitely, I'm quite bullish. I think the market's got plenty more legs, especially with rate cuts and the supply of housing.
Everybody I'm speaking to is saying the same. The sentiment's not reflecting the data that people are seeing, or the data that people are presenting.
Yes.
And I've seen something that was released. I don't know. It was CoreLogic. What's the CoreLogic being bought out by? I can't remember the name of them.
RP Data, CoreLogic.
They've been rebranded with something. I can't remember the name now.
I just refer to them CoreLogic.
I do. It's easier. They released some data saying that Perth is the fastest growing capital city again out of all of them.
Yes.
Even though we had them few dips. So that shows you the spike that we've had there. And although Melbourne's prime for the growth, Perth is still leading the way at the minute, which is great to see. Well, we've covered a lot today, mate. Really appreciate it. Last question before I let you go. If we had the median house price in Belmont today, what would you be buying and why?
Look, I personally have always favoured properties with development potential. Land is in the areas that I'm in is scarce. So you just if you try and buy a vacant block in Belmont, it's very difficult. And the only way they come available is by an old home being knocked down. So, and just, my whole real estate career, I've seen the best growth come in the land, with development potential close to the city. The negative to that is the rent returns. It's normally an old house and it's not giving you the best rent return. But I sort of always look at it to, go, well, you're going to redevelop it, and build newer homes. You're going to get all the depreciation benefits of the new home. You're going to have lower maintenance. You're going to, be getting a far superior rent. So that's the type of property that I would be trying to secure. And I'd be trying to do it fairly soon because, again, just that scarcity of, development sites close to the city. They may have to rezone Belmont to try and create more, housing solutions. So, if you couldn't afford a development site, then I'd be buying something as close as you can to the shopping centre or a transport node that's R20 that may get upzoned. Since I've been in Belmont, so I've been selling there for 35 years. So, and there's been 4 zoning changes. So, what's that? That's probably a zoning change every 8 years, something like that.
Probably due one.
We are due one, because the last zoning change sort of happened back in 2012, 2013. That then led to a lot of the multi-dwellings coming in.
Yep.
So the other thing that I'd buy is if you couldn't afford a development site, if you saw an old house and it's on a 700 square metre block and it's zoned R20, I think that would be a good buy just for potential rezoning, which I'm certain is going to happen in the next 5 years. It has to. and hopefully you'll be fortunate enough that you get an up zone. But even if you don't, the land's going to appreciate nicely. That type of block close to the city, you couldn't go wrong. If you're a first home buyer or I'd just encourage you to get into the property market ASAP, because I do see these little apartments that are sort of 500 jumping to 600 in the next 12 months pretty easily, with what the government's doing with the 5% first home buyers with no LMI. So anything, maybe even investors just buy cheap. I think like these little old units that you can pick up for 350, 400,000. Close to the city. I think they'll outperform because of the affordability point of view. So hopefully that is some good information for your podcast.
Brilliant information, Michael. Thank you very much. Really appreciate you coming on the podcast and sharing all this with us. And it was great to find out more about you on that journey at the first part as well. So thank you.
No, you're welcome, mate. Thanks for having me.
Thank you.
Cheers.
Thanks for watching. Make sure you tune in the same time next week so you can stay up to date with all cash flow positive property updates.